But hello, everyone. I want to officially welcome you to the next episode of Founders Live Conversations. I am Nick Hughes. I'm the founder and CEO of Founders Live. Today's topic, we are definitely diving into the topic of equity crowdfunding tips and lessons learned from crowdfunding, and especially we're talking about equity crowdfunding. And we are joined today by a special guest, Bruce Virga of Title3 Funds, and one of our partners within Founders Live. We're really excited to have Bruce joining us. Bruce, welcome to the conversation.
Hey guys, thanks Nick. Hey Luis. Hey everybody. Bruce Virga, Title3 Funds, and we are an equity crowdfunding platform that's been operating since 2021. We're one of the more successful platforms, and lots of reasons for that. And I'm happy to give everybody the ins and outs of crowdfunding and tell you how we engage with founders. I think ask questions. This is a great opportunity to hear it like straight. No salesmanship here. You want to know how to get funded, and how crowdfundable you may be. That's kind of the things I would like to talk about.
Awesome. And again, yes, that's what we're here for, everyone. This is really a group discussion around the topics around crowdfunding, equity crowdfunding. Bruce has he was telling me the other day, this is his day every day, is talking about this. So Bruce, this is your wheelhouse and all of that. Everyone, again, if you've just joined, we have the chat box as well. Feel free to share information. Hey, if you want to post a little information, even your LinkedIn, that's fine, that's great. But also, if you have questions, we are going to field questions as well, in addition to the topics that Bruce and I will cover here. If you have any questions around thoughts and ideas around how to execute a crowdfunding campaign, if or why you would or wouldn't, those are the things that we would be talking about as well today. But feel free to post questions or thoughts in the chat box. But Bruce, just starting from the top here, as we get into the discussion around this, let's actually just touch on and talk about the different types of crowdfunding there are available. Because when we use the word crowdfunding, it possibly could be a little confusing in terms of there's Kickstarter, there's donations and other things of that nature out there in terms of crowdfunding. But let's talk on the different types, and then we'll narrow down into the exact topic that we want to really circle around today.
Right. So there are donation type crowdfunding platforms like GoFundMe. If somebody gets hurt, people put up a GoFundMe and it helps them pay bills. This is not that. There's rewards-based crowdfunding, which is like Kickstarter and Indiegogo, where if you have a project, you want to put it up there and you want people to give you money in exchange for a t-shirt or whatever it is you're trying to build. And it's good because you get money, you don't get diluted. Then there is something called equity crowdfunding, where it's really equity or debt. You could do convertible notes, you could do common stock, or you actually get to choose the type of offering that you want to put out there. But the big thing is that it's a Securities and Exchange Commission, an SEC offering. So you're really putting together a securities offering for investors to own part of your company. So we help you. You have to file something called the Form C. We help you file that with the SEC. You have to have accounting reviews or audits depending upon how much money you want to raise. And we walk you through all of that. So it's not as easy as just uploading your information to a website and hoping people will invest. So those are the different types of crowdfunding. This is real. This is Securities and Exchange Commission. It's regulated and it lets you accept money from accredited investors, of course, and non-accredited investors. And the job of crowdfunding platforms in equity crowdfunding, regulation crowdfunding, is to protect the non-accredited investor. So we're tasked with compliance and making sure that there are no bad actors. We have to do bad actor checks on everybody that's involved in the company. We have to, and so do other people within. So for instance, escrow companies have to do bad actor checks. So everybody's really trying to protect investors from fraudsters and things like that. So those are the main types of crowdfunding out there. There's equity crowdfunding, rewards, and donation type.
Got it.
So
Well, and I think it might be helpful just to even circle around some of these terms that people will probably be seeing. And, the one that pops out to me is really what we would call the Reg CF, Regulation CF. Let's dive into that. What makes it unique? That's really what we're talking about here is equity crowdfunding. And that, there was some significant legislation that happened, years ago that has now made this possible. So, can you share with us a little bit about
Sure.
what, if someone's going to read, okay, what is this Regulation CF thing and all of that?
So regulation crowdfunding became legal in 2016. It's Title3 of the Jobs Act. That's our namesake, Title3 Funds. So Title3 of the Jobs Act, 2016. In the beginning, issuers or companies that are raising capital were permitted to raise $1 million. They changed the rule to become $5 million. So founders can raise $5 million per year through regulation crowdfunding. There are other types of investment crowdfunding, which is not regulation crowdfunding. For instance, a Reg D 506C, where if you want to raise money from only accredited investors, you're allowed to publicly advertise it. And you can raise unlimited amounts. Then there's Reg A plus, where you can raise up to 75 million from accredited and non-accredited. It's hard to do. It's expensive for you to get into a Reg A plus, whereas regulation crowdfunding is a lot less expensive and you don't have to wait for SEC approval. You have to file everything with the SEC, but you don't have to wait for approval. So it's sort of the easiest to get started with if you're looking for raising capital from non-accredited investors as well as accredited investors.
I see. Okay. And look, there's quite a bit, and later on, be prepared because I do want to ask, and we're not going to ask it right now, but just from resources, like things that you would suggest people maybe look into, maybe some websites or things that are helpful to learn more, in addition to this conversation right here. But let's go back to a little bit of, you've mentioned like this is a securities offering. If you're a first-time founder and hey, you're simply we're just looking for funding here, all right? And we're looking for options of funding. And of course, you may or may not have a crowd and a community, which we'll talk about in a second. But when we hear the word securities offering, that can be concerning or I guess confusing to a lot of people. So can you just talk about how Title3 Funds, how you help with the securities offering filing, the diligence and compliance aspect when you work with companies?
So the first thing that we're looking for are companies that we think are going to make money for investors. Because at the end of the day, if investors don't make money, crowdfunding does not work. So we're looking only for that to start. Then we're looking for companies that we think are fundable, whether they're crowdfundable or not. If they're fundable, then we have a lot of sort of metrics that we look at on that in a scorecard. If they're crowdfundable, then we're interested in talking to them about bringing them onto the platform. So as far as compliance is concerned, the first thing that we learned, is to do bad actor checks right up front. So if there's anybody that has violated securities laws or has been in trouble for various things, they won't qualify. So rather than going through the next step, that's what we do to start is bad actor checks. From there, we try to get a feel for what kind of securities do you want to issue. And a lot of founders don't really know. So we talk them through it as best as we can. We're not supposed to be advisors, but we're partners with many securities attorneys that we can introduce people to help them think about the types of offerings that they want to do. So do you want to do common stock? Do you know what your valuation is in that case? Do you know what your price per share should be in that case? If you don't know that, and a lot of people don't, that's the kind of thing we try to help you with in the beginning, and or have an attorney help you think through that. So we have low cost attorneys that are conscious of founder budgets, right? So most of the people that we're talking to these days, they've raised money from friends and family. They've probably raised a little bit from angels. They might have a business operational and customers. Those are good, and but they still have their budget conscious, and so we're aware of all of that. So then once you think about what the offering is going to be, we introduce you to a company that helps you file and build your Form C. Form C is what has to get filed with the SEC. And at the same time, we hand you off to an independent CPA who is going to do a review of your financials. So if you have your financials in good order, it's easy. If your financials is not in good order, then it just takes longer, and everything costs more when it's not in good shape. So, but we hand you off to the professionals to help you through all of these things. And so if you're going to raise more than 1.235 million, you need an accounting audit from an independent CPA that gets filed with your Form C as part of your SEC offering. Anything under 1.235 million, you just need an accounting review from an independent CPA. And if you're a brand new company and you want to raise more than 1.235, you do something called an inception audit, which is it's not scary. It's not anything, but they know you're a new company, and it's not as expensive. Like a real audit for a big company is expensive, and this is not. So it's kind of help you through that. Once your Form C is filed, then we open up escrow, and any kind of money that comes in from investors goes into escrow, and then you could draw that money out as you go through your offering. So for instance, we call it a rolling close. Let's say you're raising $1 million. You've hit $100,000 in escrow and you want to take it out, and you just let us know, and we have to compliantly send emails to those investors saying that you're doing an intermediate close. You have 5 days to cancel your transaction, all of that. And once that 5 days passes, then we can wire the money to you. It's simple, but it's not easy, right? So those are things to keep in mind.
And as we go through this, we're gonna address some of these questions already in the chat, which is great. And so we have, kind of first one that follows right into what we were just talking about is, I hope I get the name right. Gazelle is asking, does Title3 take care of the necessary filings, or is it on the founder? So maybe carrying on with that thought, when a startup works with a company like Title3 Funds, are you all really taking care of all those filings for that founder, or are they left to go figure that out themselves?
Well, so we project manage the founder. Let's look at it that way. So a lot of people ask me, how long does it take? And I say, it really is dependent on you to provide answers, and it's your offering. We're hosting it, but we know that you don't know about crowdfunding. We know about crowdfunding. We know step one, you do this, step two, you do that. And as far as actually filing the Form C, you're actually doing it. We're telling you push this button to do it and how to do it. So that's really how it works. And we review everything because it's our responsibility to make sure that everything that is on the platform is completely compliant with SEC and FINRA rules. So just know that it's basically we walk you through everything. It's not a SaaS where you just upload stuff. This is where you're talking to humans all of the time, and we have onboarding people that are expert in this.
Very good. Very
good. Hope that answers the question.
Yeah, that's helpful. And this moves into the next question. Really moves into another main topic that we were going to cover is, let's just slide into what do you look for in crowdfunding for startups that actually would meet your requirements as Title3 Funds to work with. Essentially, what is a fundable startup, and then even let's take that further, a crowdfundable startup you know, and then, you know, what Chris mentions in here is, what is it, that does it not look like? So let's just kind of lay out, you know, what is a fundable, what do you look for, and when you work with early stage startups and crowdfunding?
Well, if you look at our website, you'll see we funded quite a bit. So we know what works and what doesn't work, and we learn this through experience. So number one, fundable means something that investors will invest in. Okay, so if something comes through to me and I'm talking to you and it doesn't seem to me that it's crowdfundable, that doesn't mean that, I mean, we have investors that we know that are angel groups and VCs that might be interested in your offering. So we'll just introduce you to them and say, you're not really ready for crowdfunding yet. So what we think about when we think about crowdfunding is, do you have a community of investors that you can reach out to and say, look at our offering on Title3 Funds, and drive them to look at your offering, and they invest in you? If you don't have that, and you have to buy it. So you either have the community or you have to buy the community. So that means that if you don't have people that are going to invest the amount you want to raise, you have to do marketing and pay marketing agencies and do all of that. There's no magic. It's not where people will like magically find your offering. So I think the big secret in crowdfunding that you're only going to hear mostly here is you bring the crowd. If you don't have a crowd, don't do crowdfunding. There is no platform out there that has investors that are going to invest in you enough that it makes any, like, it doesn't matter. It's not that much that there's any crossover. Sure, we have investors that have invested in other deals on our platform, but that doesn't mean they're going to invest in you. They're going to find out about you, they'll look at it, but it's not enough for you to get excited about. That's number one thing to always think about when you're talking about crowdfunding. So short story is you have to have the crowd, or you have to have a marketing budget to advertise for people to look at your offering on a platform.
And when you say crowd, you know, let's actually determine that and define that a little bit more, as because we've talked enough. I know exactly what you're mentioning and talking about, but for those here, is there a quantified number? Is there, look, a company or a startup that has maybe the founder has tens or hundreds of thousands of followers on some sort of social platform.
Yeah.
Does that mean a crowd, or is it actually like, just somehow, some way they have a significant, maybe 100 or 200 or 500 in people that are actually investors that would be willing to part with money? How do they determine if they have a crowd or not?
I think the founders will just know. So just so you know, if you have a crowd and you know it, talk to me. If you have a crowd and you don't know it, we could test it. So we have something called Test the Waters. It's an SEC compliant way to gauge your crowd. So what we'll do is we'll put a page up on our website, and we'll collect names and email addresses and the amount from a pull down menu that somebody might invest. So then you don't have to go through all of this like rigmarole with the SEC and accountants and paying money and all of that. You just simply see if your list is going to work. So we've had some mixed successes here. I would tell a founder, I don't think so, but let's test it. And sometimes it works and sometimes it doesn't. So the answer to the question is, I don't really know, like, if 100,000 Facebook followers is enough money, or enough people to raise a significant amount of money, or 1,000 is. I don't, nobody really knows that number, because there's so many variables. Like, what about your product? What about your company? What about, why are they following you? Or are there any influencers that you can get to talk, and they could post and point from their social to you? So social is important, and customer lists are important. All of the people that you meet are important for crowdfunding at a future point.
Yeah. Staying on this topic around, are there suggestions on how to build that community? So let's say founder and the founding team comes to you, and it's determined that it's just probably a little early. What do you suggest tactics or the next steps for actually building a sizable community enough for them to feel confident to execute on a crowdfunding campaign?
Yeah, I'm going to give like a plug to a company called Crowdfund Better. It's a person who she knows she has, so they sell like a course on how to develop a community, and I would check that out. That's a good place to start if you don't know anything about crowdfunding and you don't have a community. It could take you 6 months or a year to build a community, but if you don't have one, just don't do crowdfunding. Like pitch angels and all of that forever. So I would say check out Crowdfunding Better and start there.
All right. Hey, I quickly found that link,
Oh, good.
crowdfundbetter.com. We just posted it in the chat. This is great. This is great. And just everyone, from my standpoint, and I'm using a biased view from building Founders Live, and we have our community, as well as in addition to thinking about wanting to, and even if you do raise money via crowdfunding and equity crowdfunding like this, building a community is important in many different ways. And so I would suggest, as you go about your path with your startup, think about how to involve community, build your brand, engage your ecosystem and community. And then the byproduct here is actually there's an opportunity to execute a crowdfunding campaign if you would like. So community is important. We've learned that through Founders Live over the years, and all of this. So this is great. Looking at some of these next questions here is, let's actually talk about the investors and what on the investor side. Is there regulations, and or the question from Fred is, do investors have to be US citizens? What sort of, is there regulations and or things for startups, the founders that
Here's the regulation.
What regulations do we need to think about here?
Okay, you as a company have to be a US based company. And we say to everybody, just be a C Corp. LLCs are going to be a pain for crowdfunding. We don't even want them. We have everybody convert to a C Corp. So that's company wise. You have to be US based. However, if you're like, let's say you're a Canadian company, you could have a US corporation with a tie-in where an investor will benefit. So that's kind of how you do that. But as far as investors, they could be worldwide and anybody from anywhere. Just how do you reach them, right? So investors aren't US only. There are certain countries that they're not acceptable. They're on some sort of list, but pretty much the whole world can invest in you if you find a way to reach out to them.
Right. Well, that's good to know, everyone. And just to slide in a few things here, we've had previous Founders Live conversations topics around on the legal side, and we have legal partners within Founders Live that we can connect you with that are law firms that specialize in helping international entities establish a domain and an actual corporation here in the United States. If that is a thought and a desire to then raise money, whether it's traditional investors and or equity crowdfunding. So take a look at that information from previous talks as well. If you are an international founder that's outside the United States, let's put it that way. When you look at this, Bruce, let's talk about mistakes, and then we'll talk about things to do to actually, get prepared and actually execute that campaign. But what do you see as maybe 2 or 3 mistakes, even if you feel that they're, have enough reach, and maybe the mistakes that didn't actually result in a positive outcome or successful raise? What mistakes do you see early stage startups making when they're going this direction?
That's a good question. So we've had 2 companies on our platform that didn't raise what they thought they were going to raise. Everybody else did, because we learned from them and what to take and what not to take. But so what happened is, one company was a successful company. I wouldn't even mention it because they're still on our site. But they needed money for inventory. So what happened is they raised some money from their community, but they really needed the money for inventory, and they didn't market themselves well enough to be able to raise. So you have to be really prepared by having a community and or a marketing budget in order to be successful. Otherwise you'll be on the platform and you raise like $100,000 and it just stays there forever, at 100,000. You kind of want to get momentum and keep it going. I also think that a lot of people really need to understand what they're getting into, because it's not like it's a full-time job to get started, right? You have to really think about your securities offering and what you're going to do. You have to really consult with attorneys. You have to really provide the accountant everything that they need. So for instance, if you give an accountant half of what they're asking for, then it takes them 2 weeks to circle back to you. So now you're delayed 2 weeks. Those are the mistakes that I see. People ask me, how long does it take? It's really up to you. We can get you up and running. We can move you along, but it's really up to you. So if you don't have a team, perhaps that can like jump in and help on all the various aspects.
Yeah. And I would even add, just from my perspective of, CEO Founders Live and just meeting a ton of different founders and startups, here in the United States, as well as many other countries, I would add to this or kind of double down on, you touched on the fact of almost being prepared and knowing what you're getting into. And I think part of the message here, everyone, is, Bruce is here. He's sharing thoughts, wisdom, and truth. And this is no like cakewalk. Understand what the process, what it takes to execute it. What's great is there is now something called crowdfunding and the Reg CF, regulations that 20, 30 years ago was not available at all. Right. So this is a new thing, relatively speaking. It's now available to, founders and startups, but understand it takes work. Understand that, the work and time and effort and preparation you put into it will result in, better outcome on the back end. And then, lastly, as I would reiterate, know that even the requirements to get started is like, do you have that community? Do you have that infrastructure to actually execute? And if not, it's fine. You just turn your attention in other directions, right? So I think that's these mistakes are just things that you're not fully aware of. Just know what is required as you enter into this. Just a quick thought on that, Bruce. Would you agree, or what
Yeah,
kind of
like I always say to everybody, because so you start out, you have an idea and you get money from your family, your friends, and you get some traction there, and then you put together a deck, and then you start pitching people, and sometimes you get interest, sometimes you don't. It's heartbreaking. It's like you think what you have is great, but nobody's giving you money for it, right? I think crowdfunding is just an expanded version of that. So now you're going onto a platform, you're going to have your best pitch, your best foot forward. You're going to have a deck. You're going to have perhaps a video, pictures of you, everything about your company, and like an invest now button that anybody 24/7 can come onto the platform and put in whatever they want. Like you can set the minimum, right? The minimum could be like 100 or 500. There's no maximum unless they're a non-accredited investor. Then there's rules about what they can invest. I think I kind of went on a rant there, or a tangent. What did I answer that question?
Well, yeah, just I think what we're talking about here is just know the process. It takes work. People are just not going to discover your events, your invest page. You do have to bring people there and all that. So, which brings to let's talk about. Hey, scenario is that they meet your requirements. You're like, this is great. You've agreed to work with this early stage startup that's now putting together a equity crowdfunding campaign. It's all good. What are the first, like, let's call it a couple different steps, 3 steps, 3 things to do and prepare for that are your suggestion and or requirement when they're working with you? Hey, here's the things that we're doing now to deploy it, get started, and get momentum.
All right. So once you're ready to go live, as soon as escrow opens, so escrow gets open after your Form C is filed with the SEC. And then the escrow company goes through its process for 3 days or whatever. And now your Invest Now live, your Invest Now button is live. Immediately you reach out to everybody, all of your lists, all of your social, point everybody to it. Make sure your website says we're doing a crowdfunding campaign. Consider investing. Click here to learn more. Everything about the offer has to be on the funding platform, and it can't be elsewhere. So this is the sole place where everything about the offering must reside. So you can't say things that are outside of that. So you drive everybody there. We will actually help too. We have our lists and our social, and we post, and that I see some crossover, but like I said earlier, don't have high expectations for that kind of momentum. So it's really you just figuring out ways to engage people. You have to really be active at it, right? I mean, if you're pitching angels, you got to pitch them a lot, right? You have to keep doing it. And same thing with crowdfunding. You just have to keep pushing, and it works.
Yeah, it works. The amounts that, let's talk about what should be expected from the amounts of, okay, they have a crowd, they have a community. What are the typical amounts that you all are seeing when a crowdfunding campaign is executed? Are we talking about $100, $1,000, $10,000? What order of magnitude is expected here?
So I see average of $2,400 is the average investment. You're allowed to set your minimum any way you want. Now you have to also consider what the cost of marketing. So is the cost of a lead going to cost more than the amount that they'll put in? So you kind of have to think about that. But we have marketing agencies that we can introduce you to help you think through that. So let's say you set your offering, your investment at 500 minimum. So people come in, they'll invest 500, they get X amount of shares, they get a subscription agreement. But I see checks way higher, like in the $100,000 range, which is, you would be surprised, but people are really interested in some of these deals. We're just trying to. I think the reputation is we're only trying to put out deals that investors will make money with, and I think investors understand that. It's not just like a marketplace where there's 500 deals listed. So that's an important way to look at it.
And then, so let's take a scenario here, and let's look at that in the same raise, someone put in $1,000 and someone put in 100,000. How is that equity being determined? And or then let's even talk about the cap table. Are those names actually on the ownership capitalization table, or is that just a one entity that's managing all of the group of investors in this crowdfunding? Can you detail out those specifics around that?
Okay. So first off, when somebody buys shares in your company, let's say they're priced at $1 a share and they put in 500, they own 500 shares. And if they buy $20,000 worth of shares, they have 20,000 shares, right? So that's how you set it up in the beginning. By the way, you can always, as you go, increase your valuation. So let's say you start out with these very early investors at a very attractive valuation, and then you get a lot of traction. Then you say, all right, I can increase my valuation, meaning the share price goes up. And then it's a great way to minimize your dilution. Then the answer to the question about cap table. So this used to be an issue, right? A lot of people that were VCs would tell individuals who are raising capital, if you're doing crowdfunding, we don't really want to invest because your cap table will be messy. All right. That's really not true. And what happens is that there's software like Carta that manage your cap table. So everybody is on the cap table is not really a big deal. But the SEC in 2021 permitted something called SPVs, or special purpose vehicles. So you could actually have a special purpose vehicle where all of the investors that have invested in you are actually one line on your cap table, and that cap table, one line is that SPV, and they're all under the SPV. So that's just another way to do it. We don't think that that is really, I mean, it's another expense, it's another thing to manage, and it's really not that necessary. And VCs and people that used to say those things are not really saying that anymore. It's just, that's what they said back in those days.
Okay. So less of an issue now, which is good. Fred has another question around this topic. Again, let's come back to even that 100,000 level investor. When you're doing an equity crowdfunding like this, is there actually a lead investor, and do they drive that term sheet? Or is it more like the terms are already determined, there's no need for like a lead investor?
Yeah, so so this is like a question when you're talking to VCs and they're always looking for like a lead. In this case, what you're doing is you're working with the securities attorney and us to put out an offering. This is the offering. Everybody has same access to it, whether they're putting in 500 or 100,000. It's the deal. There's not like separate deals. So the answer is you don't really need a lead investor. If somebody has invested $100,000 and you want to ask them, can you feature them as an investor, saying that they put in $100,000 to show like traction, get some momentum? Yeah, sure. But the whole concept of lead investor isn't anything. A benefit to crowdfunding is that you're setting the terms of the deal. Like, you don't have to negotiate the deal. Everybody gets to read it. You want to make it attractive, of course, because you want the $100,000 checks, but you're setting the terms.
Good. Thank you. This is almost like a expectations question, all right, for everyone here, expectations and going into a process. From start to finish, start even being like initial contact of talking with like yourself with Title3 Funds or other companies, and kind of like first meeting and then getting started, to expectation of like maybe a first close of their first amount of investment and money actually hitting the bank. What time frame are we thinking about here, just so people can be understanding and expectations correctly around the process?
All right. If we talk today and it's something that you want to do and it's something that we want to do with you, we'll have you sign a listing agreement with us. So now we move forward. Now I'll introduce you to the onboarding team. So we have a Calendly, we all figure out what's the best time to meet, and then I give you a handoff to our onboarding team. From there, they're going to give you homework. And I guess the short answer is it takes 4 to 6 weeks if you're quick and you as a founder are doing everything that our team's having you do at that pace. So if, like I said earlier, it takes you 2 more weeks to get something to an accountant, then that just delays everything. So it's really driven by you. We try to drive you and project manage you, but let's say best case scenario would be from the day we speak, you do everything you need to do. 4 to 6 weeks, you're up and running. Now you start collecting funds. Let's say it's an immediate hit, and there's $100,000 gets in there right away. By SEC rule, you have to leave that money in escrow for 21 days from the time your Form C is filed. So that money stays in escrow. It's an SEC rule because I guess they want to have the ability to like inquire, within that time. I've never seen anything like that, but that is the rule. And then you could start drawing money down from escrow. You just let us know. So what happens is 21 days, you say, I want the $100,000. Then we send an email out to all of those people who've invested saying you're going to be doing an intermediate close. And then we wire you the money. The escrow company wires you the money 5 days after. So that's how quickly it can happen. So 4 to 6 weeks, 21 days, and then another 5 days.
All right. So on the short end, 2 months, 2.5 months, and then obviously it can be a lot longer.
Right.
Is there any Out of your experience thus far, is there any kind of stories that stand out to you? Either like, I mean, you mentioned a couple others before, but you know, it could even be like, oh, this is just a perfect example. They just kind of did everything along the book, or like yeah, that was like that stood out as what not to do. Anything that jumps out in terms of stories that you maybe want to share?
Well, all right. So there is a company that is on the platform, a B2B company. And we were wondering, like, it's B2B, is that crowdfundable? But it turned out that they have a customer base that is really like good customers. So that what we did was we did a test the waters campaign to see if they reached out to those customers of theirs, letting them know that they could be investors in this deal, what would happen. So we did test the waters. They came in and they saw a significant amount of traction from the people that were their customers saying that they wanted to invest. So everybody thinks, you have to be maybe like an alcohol brand or something like that to do well in crowdfunding, but it's not just that. So we don't really know, right? Every company has their own specific dynamics, but if you're interested, test it. That's all. And so this company went on to do a successful raise through their customers and a few extras that have like read about it, and they marketed themselves on Facebook a bit. But that kind of stands out because a lot of people would not think B2B would be good for crowdfunding, like we didn't, but we tested it and it worked out.
Yeah, test, just little tests, and I think that that's important. All right, so I'm going to read this one. We have a longer question here. I'm going to read it. I noticed that the Cub Crafters deal opportunity is on both Title3 Funds and Manhattan Street Capital platforms. Title3 Funds is a Reg CF and Manhattan Street Capital is a Reg A+ deal, but both are $5 per share. Is there a difference between these opportunities for the same company? So are you following that question?
I know exactly what's going on. So okay. Manhattan Street Capital is hosting their Reg A campaign. Manhattan Street Capital is not a broker dealer, so they're not permitted to accept funds from certain states. So we are working with Cub Crafters and Manhattan Street Capital to fill in the gap. So we're allowed to take money from anywhere in the world, whereas Manhattan Street Capital is not. So we're just basically doing an assist here to help them so that they can take money from everywhere. That's kind of like the inside scoop. Nobody really even knows this, but hey, you heard it for the first time.
Heard it here. Well, that's helpful. Yeah, good question there. Good question.
It's just a technicality, right?
Yeah, that's good though, and it's good to know. It's just great to know. Luis, good question. Let's go here. What can you tell us about the audience for crowdfunding? Is there a type of startups that should focus on appealing to it, or does it vary per opportunity? Meaning, maybe this is more like you kind of mentioned it before, like B2C versus B2B, but do you have any insights on the general audience or investor pool that is leaning more interest in crowdfunding? Do they lean more B2B, B2C, or does it totally depend on the startup?
Yeah, I don't think about it as an investor pool. That's kind of a fallacy. It's basically your crowd. So if you have a product and that you're selling, like a candy bar, and you've sold 1 million candy bars. Now you have an opportunity to reach out to all of those people or put something on the packaging with a QR code to your crowdfunding raise. That's your investor pool, is your crowd. All right. That's the way that it works. If you have an e-bike company, well, every kid basically has an e-bike these days. So now their parents would love to invest in that company. To me, that would be a perfect opportunity to have a capital raise on crowdfunding. But it varies, right? I mean, it's like I talk to so many founders and they're all over the place with totally different things. It's just, let's talk about it. I don't really know, but if we don't know, we could test it.
Yeah. So interesting. And it's important that as you make that distinction, it's each company, each startup, it's your own crowd, and depending on what you're actually creating and what you've brought to the market, depends on how much you've, the adoption you have, but your users, your customers, your ecosystem is most likely the ones that are most passionate and excited about what you're building. And so that's the whole point of equity crowdfunding is to open this opportunity up in that direction for that. Bruce, do you have, what sort of resources would you share? 2 or 3 things maybe that, you've already mentioned this initial, crowd fund better. We will share that again, is an awesome resource. We just shared it again in the chat, which definitely check that out. But what other resources would you suggest people that are interested in, I just want to learn more? We've already put on Title3 Funds website and link there. What else would you suggest people go and check out?
Well, so our resources, when I meet founders, I talk to them about where they're at. So we start out with, is it fundable? If it is, and it's not crowdfundable, I have resources that I can introduce you to people who might be interested in you. I don't know that they're going to be interested in you, but I have basically a book that I have of my own that I keep on who's interested in what kind of deals. So then I give them to them in hopes that they give me deals that are crowdfundable. So that's one thing I could offer. Once you go down the crowdfunding path, you should learn really what it's about. So that I think Crowdfund Better is like crowdfunding 101, or it's pretty early and easy, but start there. Read everything you can. I didn't post the link, but the SEC has, I could find it, but the SEC's website has a lot of information about the rules, and it's very regulated. Yeah, you should understand the rules. We try to help you understand the rules, but they are the rules, so try to read about that when you get a chance. So SEC regulation crowdfunding somewhere on the internet. But I guess our ecosystem is our partners. So when you work with us, we have attorneys, we have CPAs, we have marketing agencies, we have bankers. These are all of the people that you're going to be doing business with when you do crowdfunding, and that's it.
All right. Just the beauty of the internet is pretty quickly you can find these resources. So we posted the SEC link there as well. So everyone, I think the key of this conversation is definitely do your research, check out these resources, really look at the status and where you're at with your community and understand. I think the last part here I want to touch on is really just maybe other tips about fundraising. And if anyone else has any questions, let us know in the chat, we can answer them. But the thought here is around, I feel like it's an interesting time in the market right now, in the especially the early stage funding market, whether it's traditional, more traditional, like, hey, we're gonna raise a round of funding with angels or early VCs, or if you're looking at crowdfunding, it's a down year for sure, everyone, and that's just the reality. And my suggestion and thoughts are, if you're going to go the route of raising funds, it really is a full-time job, in the sense that it's going to take all your time and effort so that you're best positioned, and you've done everything that Bruce has talked about here. You're crossing the T's, dotting the I's, you're setting up meetings. So if you're actually traditionally raising money, you need to have scores and scores of meetings, 50. I'm not saying go and talk to 100 investors. Is that the right thing to do or not? But it's going to take a long time. And the part of this here is that that's going to take you away from your business and in the daily operations of things. And so I think it's important to understand the commitment. So Bruce, do you have thoughts around, even just the binary, like, do you go raise money or not? Is there like suggestions of, what should they have already accomplished before you even think about bringing outside capital into your company when it's basically a full-time job. Secondly, you don't want to spend 6 to 12 months and then take away from the business and then not raise the amount of money. So now you're in a worse position because you didn't even get traction. What are your thoughts on that, Bruce?
I'm not sure I understand the question, but I'll try to talk around it. So I think if you're a founder raising capital, you have to know what you're doing, because if you're crowdfunding, everything is on the platform, right? So they're going to see you in a video. If you're talking to investors that are not on the platform, they're professionals. They know whether they are going to make money with you or not just by talking to you in 5 minutes. So have your act together. They're always asking, what have you done before? So have some sort of pitch behind what you like, an elevator pitch about yourself, so that they're not, you're not a first-time founder. If you're a first-time founder, like, why are you going to be good for this? That's the hard part, right? It's like everybody has to start somewhere, right? And my only advice is, if you give up, it's over. Otherwise, it's not. Just keep going, right? And figure out a way to raise capital to make your business bigger for them. You want these investors to make money.
Yeah. Well, I mean, what I would add to that, and I meant maybe it was a leading question, so there you go. But I think in some ways, everyone, like, you're not guaranteed an investment. All right. And I think sometimes founders think that way. You're not guaranteed an investment. And more importantly, great, or at least, getting traction, getting momentum in the right direction only improves the opportunity to raise money from either crowdfunding or traditional, investors on a traditional raise. So I would suggest that as a founder and an operating team, you at least have a base of, some traction, or, evidence in the market, product market fit, things are moving in the right direction. If they're not moving in the right direction, I don't think any amount of hope or pray or just investor meetings is going to solve your problem, because you're not an investable, fundable company. And that's, Bruce talked about it earlier in the session, a fundable company, right? So that's what I'm saying is, are you a fundable company? Is maybe to start with, to focus on your business, focus on your traction, get things moving in the right direction first.
We're implementing, probably first part of the next year, an assessment, so that now when people apply to Title3 funds, you go through this assessor that is done with AI, and it's going to give you feedback on, like, your best way to raise capital or what you need to do. It's going to be prescriptive as well. So the idea at the end of the day is, it's going to tap us on the shoulder when a good one comes through, right? It's a way for us to manage our funnel, because we have tremendous deal flow, and it's just, we talk to founders, but we're thinking that AI might help with this, and it's going to be prescriptive, so it'll give you feedback. So when that's announced, come back.
So cool. One last question, then we'll probably be done for the day, everyone. Mohan asks, is there any specific industry where crowdfunding should be used or should not be used? Maybe just circle around. You did mention it a little earlier in some of these things, but is there any industries that it is awesome and it's great, and then maybe should not be used? Does that ever come up?
I don't have enough experience to tell you the answer to that, but I would say all industries. It just depends upon what kind of community you can bring to your deal for raising. Our most successful happens to be a hemp company, where they raised a phenomenal amount of money from their customers. So they realized it was dual purpose marketing dollars. They were spending money for customers, so they also spent that same dollar on turning those customers into investors. So they marketed them their product and their investment with the same dollar. So the hemp company did well, alcohol brands do well, and it's just because everybody wants to own a tequila company these days, right? So
Yep. Well, there you go. It's really about, do you have a community reach? Do you have at least an amount of people, an amount of community that you all feel could bring that amount of sizable investment to your table. So with that, everyone, Bruce, we want to thank you so much for joining us. This was a very educational and this is a great session here talking about these topics. So thank you so much for joining us.
All right. Well, thanks for the opportunity to talk to you all.
Absolutely. And everyone, Title3Funds.com. You can find that in the chat, or if you're listening to this, it's Title3Funds.com. You can find that probably in the YouTube link, or the information there below. And that is it for everyone. This is Founders Live Conversations. We do a couple of these a month, so keep your eye out for the next ones, and join us next time. Thank you, everyone. Have a good day.